Alrighty, test, 1, 2, 3. We're gonna wait a few minutes here and then we're gonna jump into the traditional after hours recaps. We're gonna look into the option premium sold. We're gonna look into ES today. I still have my notes on the charts, and we're gonna of course go into the pre-market planning. How did price action react to our pre-market reads and the valid setups for today? So we're gonna give it a few minutes and then we're gonna get started. For you guys that are tuning in right now, if you have a YouTube account, you can type in the YouTube chat, or if you're in the Discord, I need to change title. Let's go ahead and see, change title. Yeah, I'm gonna have to figure that out after the stream. Says my broadcast. Yeah, I see that. We're gonna change it after the stream. Today's definitely a test, so not too sure. So my OBS is the screen recording, and that has its own title, but then YouTube is not picking up that title, unfortunately. So I'm gonna have to go into the settings, check it out. Oh, I see it's in the meeting here. Alrighty, but anyways, I'm gonna bring over the Discord now, and let's get started. We're going to do a brief overview of the Discord. We're going to talk about the premium sold, and we're going to talk about the active ideas for ES today, or MES. Let's go ahead and drag it over. So as always, you guys need to click on the premium selling channel. It's right here under the SPY VIP members if you're interested on looking into the premiums sold. New to the chat, excited to learn. Let's go. Nice to see you, Jay. Nice to see you. So the premium sold is what Rich's cup and tea is nowadays. Essentially what we're doing is we're looking to take advantage of the S&P 500 being the most bullish instrument in the world. So this is specifically for his MES contracts, right? You can see all the strikes here, 65.20, 64.70, 65.50. If you're paying attention to the higher time frame, you know that these dips are extremely significant and they're going to need extreme external context for the market to dip that deep. That's why the win rate is close to 90%, and we're expecting the premiums to be collected here, right, with the expiry 12 days out on October 10th. 65.20, let's go ahead and measure 65.20 from a retracement perspective. So if you go from all-time high to 65.20, which is right there, that's a minus 3.5% drop on the S&P. And when you have this very basic fib here on the 4-hour time frame, you know that this fib is going to sustain the bullish leg until proven otherwise. So a minus 3.5% dip, why wouldn't you want to buy that dip regardless? So the premium selling is perfect synergy between the higher time frame swing ideas and of course just collecting very basic income weekly with a high win rates, right? So that's the premium sold for today. Please stay tuned if we are going to sell anything for the stocks channels as it pertains to selling premium for stocks specifically. So for today, definitely Sunday 6:30 p.m. we started to sell, and then Rich also did a gap fill setup and sold some more, excuse me, the 65.50 puts via the gap fill setup, and we're going to go into full detail now with ES. So if you guys are ready for ES, let's go ahead and do that. But before I go into the notes, everything is sent out in the Discord. All of this is in tune with the premium selling because, well, we have all the levels ready and good to go, but execution is the most important part. So how do you actually execute these levels? And I added a new addition to my pre-market planning and my after hours planning called how to formulate a trade plan, because I know a lot of you guys understand the market structures well. You understand how to buy the dip well from a pure strategic perspective, but execution is where a lot of traders fumble. So execution is what we're always going to focus on from a psychological perspective and a risk to reward perspective. Also, guys, if you guys are in the Discord, you saw that Rich announced that we are going to be creating a Trading Wars Substack. And in this Substack, we're going to be including every single thing that we do in Trading Wars with real capital and real P&L when it comes to the premium selling, any of the futures positions, leaps, anything that we do in Trading Wars will be included in there with a full debrief every morning before regular trading hours opens. So you can get real-time levels, you can get real-time calls to action within our portfolios, and after hours as well, you can get the entire recap. So without further ado, let's go ahead and jump into the notes for today, and let's discuss ES. So the short-term contextual bias for today is that the chart is a lot more neutral now, with a slight edge to buyers off of the recovery of last Friday's high. This structure was a massive inflection point last week, also being last Monday plus Tuesday lows. It will remain the intraday line in the sand, expecting range trading today. So from an external contextual perspective, we're expecting range trading today because the overnight structure has already completed a breakout above last Friday's high, so we can digest, and we have more news throughout the rest of the week, in which ES always loves to digest before news. That's what creates range trading. Last Friday, sellers were able to defend 6,700s off of last Thursday's fantastic false breakdown, trapping range low sellers into a traditional move into breakdown structures. On Sunday, 67.0375, last Friday's high broke out, and the chart is now extremely neutral without any side being in control, although the structures are clear if one side wants to go parabolic and trap the other. So for today specifically, we wanted to see that breakout structure hold. If you are interested in the upside, obviously you don't want to necessarily long all-time high, and we're only about 10-15 points away from all-time high. So your location and entering from a long position perspective, if it's close to all-time high, what are you doing? You're sacrificing risk reward, and you're also likely just succumbing to the fear of missing out, right? In order for us to have a good position to the upside, we need to have good upside potential, and that's why the dips, no matter what time frame you're on, always make the most sense. And the fibs help us understand what that means because you're trading retracements, right? So let's go back to the notes. For buyers, they must break out of macro resistance now to resume bullish timeframe alignment and print new all-time highs. The macro resistance is at 67.4450 through 67.57, defending 67.1975, showcases strength for a likely move into this macro resistance. 66.95 through 67.0375 is also significant support and must hold if bulls are to keep the charts neutral. If this zone fails, we will have to view the watch list and see if the market is showcasing excessive weakness, in which bulls can be trapped for a move into the prior week's range low, including last Friday's low. Bulls holding above last Friday's low in general, printing a daily higher low is healthy. So when you're reading through these notes, you see how I'm understanding the markets from a pure contextual perspective. It's about the buyers and the sellers. It's about the emotions that they experience when specific things are happening. And usually we only go up and down, right? We could go sideways forever if the market wants to. But when we're going up and when we're going down, that creates emotion in these buyers and sellers. That's why 67.4450 through 67.57 breaking out is important to the context of the chart. And when you align that with the fact that the range for today is expected to be neutral, that could be a great area to short. But before we jump into how to formulate a trade plan, let's read the last section here. For sellers, sustaining price below macro resistance 67.4450 through 67.57 is a must for what I just said. Expecting a reaction here on first test as it's fresh macro resistance, and the chart has simply been slow grinding higher since 11 a.m. Friday, Breaking down below last Friday's low will be key for volatility to return, although 67.19 plus 66.95 through 67.03 is a start. So I think in general, the structures for today to dictate who's trapped and who's in control on which time frame is very, very clear. So execution now. How do you formulate a trade plan? That's what this section is going to be about. This is a brand new section that I've added to my notes. And this section is probably going to be the most important section of the notes that takes place in the pre-market and in the evening after hours. So in the pre-market and after hours, eventually all of this will be entangled in our Substack in addition with the premium selling. But for now, while we create the template and all that good stuff, I'm just going to keep it traditional in the Discord. So let's go ahead and read the trade plan for today. How to formulate a trade plan based on the notes. The chart is neutral now, and we can see two-way action today, especially considering that the external context is quiet. So we don't have any economic reports today for NYSE. I know that macro resistance has high probability for a reaction on first test. I know that 66.95 through 67.0375 is a must-hold support for a high probability reaction on first test as well. Therefore, I don't mind risking points at these structures as the breakdown of them can change the bias of the chart. And that goes back to the original thesis, the emotional market participants, how they react when these levels are contested or broken up to the upside, right? So unfortunately, the short did not get tested. 67.4450. The high of the day is 67.3125, which is in alignment with last Wednesday's pre-market high. But the long did get contested today. So if we go back to the long trade idea, we had 67.0375 with a 10-point stop loss, 66.9375, and a target of 20 points. But of course, this target can be adjusted in real time given the real-time information, 67.2875. So let's go ahead and draw the position tool. Why is the position tool significant? Because the position tool is going to do all of the math for you. With futures, you can have fixed risks. With futures, you don't have to deal with the Greeks, but you will have to deal with margin, and you will have to make sure that your stop loss is always on the chart, because theoretically, if the trade goes against you and you don't have a stop loss, your accounts can go to zero or you can get margin called. So those are the biggest takeaways with futures. But of course, you don't have to deal with the Greeks, and you get access to overnight price action, which is an extremely important edge as well. So $200 of risk, and if I place that exact same trade idea, 67.0375, and my stop loss is 10 points, 66.9375, we can copy and paste it over. You can see that the chart is telling me that the position tool is telling me that I need 4 MES contracts to supplement that $200 of risk. It's 0.4 ES contracts, so that's the equivalent of 4 MES contracts if you want to risk 200 on this day trade. It's definitely a day trade. This zone is an intraday zone. The more significant zones are all the way down here. But given the context for today, very unlikely to get there. So if you want to day trade this zone and risk 1R, I don't find anything wrong with that. 1 times your risk as profit is right there, 67.1375. That's plus 10 points above your entry. And then 2R is right there. Unfortunately, because the market is digesting the overnight range, we really could not get much more of a follow through than 1R. But the stop loss was not triggered. So this trade, if you managed it at 1R, or if you just went into cash at 1R, so if you realize this position at the close, this is a fairly decent 1R trade, and it is a high probability trade as well, given the fact that the chart is neutral, given the fact that there's no external context for today to create volatility. For example, the Powell speech last Tuesday was an example of volatility being created from external context. And when you put into the breakout structure, when you put that into context as well as 66.95 through 67.0375, this fresh breakout structure from Sunday into this morning, the fact that we got it today means that buyers must defend, because if they don't defend, then they're trapped. Remember, you have to be willing to risk your cash here, because there's no guarantee that it's going to work out. That's pretty much all for today. If you want to journal it, I have a journal format lined up right here. So for example, let's go ahead and journal that day trade. Today is 9/29. The risk reward is 1R. Let's just say you went into cash at the close, because if you're a day trader, that's usually what you do. The P&L is plus 200. We got 1R. So we got 1R. We didn't get 2R, and we didn't get 3R. So that's as basic as you need to keep it when it comes to journaling your P&L, right? But it gets more into detail when you talk about journaling the emotions of the trade. Did you follow the trade plan? Did you execute an edge? Did you execute a process? Yes or no? Everything needs to be written down and everything needs to be reevaluated, because trading is about constant refinements, right? As you guys have been watching Rich and I's journey, we've been doing a lot of different things versus what we were doing 2 or 3 years ago, right? Trading is about constant refinements and being better. And even just from a basic outlook of the charts, this charts can flip on its head tomorrow if it wants to, right? That's not up to us to dictate what the chart wants to do. We follow whatever the chart does. So for example, if we wake up tomorrow and the S&P 500 has a minus 10% gap down for whatever reason, we have to adapt to that new context. We have to adapt and we have to make sure that we're ready. We have to make sure that we have plans in place to protect whatever positions we have open, right? And to make sure that we're following along with price action in real time. That's all for today, but let's do a quick rundown for the ideas heading into tomorrow. So on the 4-hour time frame here, let's do a quick overview. You'll notice that the line in the sand ended up holding today. The line in the sand at 67.31 is significant because 67.31 was the first support that needed to fail last week, the first significant support that needed to fail last week in order for us to get the pullback going, right? So 67.31, sellers are still holding it. This was an actionable 4 hours short if you're interested. For me, I remain hedged. For me, my account remains hedged. So let me just go ahead and bring that over. So my MES, this position at one point was at 6R. It's only about 2R right now. But the reason why I'm not managing it is because it's a hedge. It's a hedge and it's defending this position right here. It's also defending my other open positions. But this is the biggest position I have in the portfolio right now. It is Tesla. And if the market is to start to correct, then that insurance hedge is protecting this position, right? That's the whole purpose behind why I shorted all-time high last week. I needed insurance. So portfolio goals, understanding your portfolio goals is important. Not everybody has the same amount of capital, therefore strategies may change, and not everybody has the same goals. Some people want to be long-term investors. They just want to stay in the market as long as possible. So strategies can change, mindsets can change. Some people just want to swing trade and they want to get, 3, 4, 500% on a single trade, and then they want to rinse and repeat. Absolutely nothing wrong with these portfolio goals. Nothing wrong with these mindsets, but you have to make sure that you have goals and you have it written down so nothing is confusing. You know what you're doing and you know how you're going to react to price action before price action even develops. That's why the process is so key, right? The process and the trade plan here is day trading. We know that we want to trade these levels. We just want to get a quick hit. We want to get a reaction and we want to get into cash at the end of the day. That's the purpose behind this trade plan, right? It's an intraday bias. It's intraday structures. And then when I go to my own trade plan, my personal trade plan, I'm looking at the high quality levels only. I'm looking at false breakdowns for high quality macro levels only. So 66.11 is fairly far down, but that's my only high quality macro low of interest. And I'm going to wait for it. If we print new all-time highs, then we're going to look for last Friday's low, right? And we're going to rinse and repeat. Other than the predetermined setup today, guys, obviously this is a great false breakdown down here to apply the entry model. In my September 2nd massive document that I created, we talk about the false breakdown entry models. So you can literally just mark it into the levels when you see these false breakdowns in real time. Or you can take the Fibonacci trap, which looks like so, right? False breakdown, higher low, Fibonacci trap, and we're going. Today, I don't see a Fibonacci trap, but we can go onto the 1 minute time frame. And it does present itself very, very tiny Fibonacci trap right here at 3:30 p.m. But the traditional false breakdown worked out and the predetermined system worked out as well, based on the notes in the pre-market, how to formulate a trade plan based on the market structures. So I appreciate you guys so much. I'm going to do a little bit of reading now. We're going to jump into the book Best Loser Wins. And we have a lot of projects undergoing right now. We have a lot of plans. We have a lot of ideas. As you guys know, we talk about that traders need to be better every single year, right? It's about constant refinement. And after a full year of collecting data, after a full year of understanding what works and what doesn't, your strengths and weaknesses, you should definitely spend some time reflecting and trying to figure out what you can be doing better for the year to come. So it's as early as September, you can start to plan, you can start to strategize, you can start to think about specific things that you want to implement into your trading because you had a full year now of experience and data and journaling to make sure that you can use your strengths to your advantage and you can make sure your weaknesses are taken care of as well. I'm going to quickly find the page that we were in and we're going to jump into the book. But we're going to stay on YouTube as well. We're on page 209. I do like YouTube because everything is already recorded and good to go for you guys. The YouTube is great. So let's go to page 209. We're almost finished the book. This is Best Loser Wins by Tom Hugard. It is the #1 recommended book that I got recommended from you guys and from other mentors that I have. So this is definitely a book that I recommend as well. I'm almost finished it. It goes into the psychology of trading. And the psychology of trading really just comes down to, are you doing the work that other retail traders that fail don't want to do? Are you doing the pre-market planning? Are you doing the after hours planning? Are you doing the journaling? Are you doing all of this good stuff? Are you applying the good habits, right? Kobe Bryant woke up at 5 a.m. every day and started shooting some hoops. It's the same thing that we need to do as well, right? Because trading, at the end of the day, is just like a professional sport, right? We need to have coaches. We need to have good mindsets. We need to be positive. We need to be grateful to play the game. And we simply just need to be better one step at a time. When we fail, when we get knocked down, we brush it off, get back up, and we're back again the next day with the exact same positive mindsets. So let's go ahead and jump into the book now. Best Loser Wins, Tom Hugard. We only have about 40 more pages. So 2 more sessions and we're going to start a new book. Let me go and turn on my lamp. For those of us that are tuning in from the Discord, you can also write messages in the Discord and I'll read it out. If you don't want to use the YouTube chat, maybe you don't have an account or something like that. Expect to be uncomfortable. How can you have a good time while you are uncomfortable? Logic will say it is impossible. Well, for starters, I think all humans come alive when we strive. We toil in the garden, we work out, we study for an exam. I think it is perfectly possible to be uncomfortable while enjoying a challenging process. As a trading position grows and profits, instead of giving into the fear it will be taken away from me, I flip the switch using my mental warm-up, my training exercises, and visualizations of trend days where the market just goes higher and higher all day. I flip the switch in my mind from negative mental imagery to positive mental imagery. I see myself riding the monster momentum wave. I see myself being at the forefront of every tick higher. The 90% will focus on what they want to avoid. I focus on what I want to achieve. The 90% give in to their fears. I expect my fears to come in abundance, and I have a plan for counteracting them. I see a different image. And when I am losing, well, I already expected to lose anyways. So the market disagreeing with my trade will not be associated with pain or fear. I expected it. I have accepted my loss already. I don't entertain the idea of compounding my mistake by adding to my losing position. I have trained that trait out of my mind. It doesn't even enter my mind anymore. My mind knows I want to be big when I am right, and I want to be small when I am wrong. Emotions kill trading accounts. It isn't the lack of knowledge that's stopping you from winning big. It's the way you handle yourself when you are in a trade. I spent a decade observing traders lose money. They were intelligent, people who often had great hit ratios, but they couldn't lose well. After reading this far, if you remember only one thing, remember this. In trading, unlike life, the best loser wins. The ideal mindsets. There is an ideal way to think as a trader. There is an ideal mindset, one that is flexible to the extreme. It does not care about winning. It does not care about losing. It is a carefree state of mind, but it still acts in your best interest. The ideal trading mindset has no fear. If you are alarmed by this statement, then pause for a second. The ideal mindset may have no fear, but the ideal mindset is still acting in your best interest. The ideal mindset might be fearless, but it is not reckless. Fear plays a significant role in explaining why people lose the game of trading. This fear can manifest itself in several ways. It can be the fear of not being in the market and missing a good move. It can be the fear of staying in the markets for too long and seeing the open profits disappear. Can you acquire an ideal mindset? Yes, without a doubt. You may have to grow into it. You may have to begin a period of significant introspection and get to know thyself. I will discuss how to get to know yourself as a trader shortly. The ideal trader mindset does exist, and you can train yourself towards this state of thinking and believing. When you arrive at this state, it means you are able to perceive information from the markets without feeling threatened or fearful. Does it mean you will never lose? No. You will have losing trades just like everyone else. However, the ideal trading mindset is at peace with losing trades, as it is with winning trades. Neither will impact your ability to unemotionally and dispassionately perceive market information in a non-threatening frame of mind. Your emotional states will stay in balance. Every trader has experienced periods of being in the zone, of being balmed by the soothing feeling of the ideal mindset. It often happens when certain circumstances are present. For me personally, I experience that sense of calm whenever I am trading while on holiday. One story stands out. I was on holiday for 14 days and I traded every day from my holiday home. I was totally at peace, trading only when the market really spoke to me. Otherwise, I was at the pool relaxing in the sun. When I returned to the trading floor, my boss came out and said, "Someone is on fire," and clapped. 14 days later, I had given away all my holiday profits. I remember the story so vividly because it happened to be one of the catalysts that led me to seek a deeper understanding of myself as a trader. Hard-coded DNA. The ideal mindset does exist, but few traders have it consistently. When we do not operate from a frame of mind of the ideal mindset, we are afraid of something. This fear is a manifestation of a lack of trust. We do not trust ourselves to do what we have to do without hesitation, without reservation or internal conflict or argument. Our mind is the problem. Our mind's core objective is to keep us alive and avoid pain. We are automatically wired to think that in a way, we are automatically wired to think in a way that keeps us alive. This thought pattern is hard-coded into our DNA. It might keep us alive, but it makes trading difficult. The very thing that keeps us alive is the very thing that makes trading an incredible difficult proposition until you have learned how to counter your hard coding. The issue we face largely fall into two categories. We associate this moment with another moment, whether we are conscious of it or not. We have a mind wired to avoid pain. We have learned to associate in order to benefit from experiences. Association connected past moments with the present moment, and pain avoidance do not go in hand with trading. Why do I say this? Why do I say that association and pain avoidance are detrimental to profitable trading? I say so because in trading, each moment is unique and anything can happen. Trading is the equivalent of a coin flip game. Since the win ratio of many professional traders, including myself, is not far from 50-50, the coin flip analogy is even more appropriate than than you might think. If you play a game of heads and tails, you are probably not too concerned about the outcome. Over time, it will play itself out quite predictably. You will win 50%, you will lose 50%. If you developed a system where you lost a unit on your losses and you made 1.5 units on your wins, you have yourself a good business. Trading is just like that in many respects. You don't judge your system on the merits of one trade, you judge it over many trades. We do so because even a game of heads and tails will show an uneven distribution, even if the outcome over 100 flips is 50 out of 50. As my friend David Paul once said, there is randomness in the outcome of 1, but there is order in the outcome of 100. He was talking about the coin flip scenario. I once flipped a coin 100 times, and I wrote down the result on a piece of paper. I witnessed 15 heads in a row. At one point I stopped and I looked at the coin as if to see whether there were obvious flaws to it. There weren't. If you had 15 losing trades in a row, I imagine your mental states would suffer. If you had 15 winning trades in a row, you would feel invincible. The market will do that. The market will do what the markets will do. It doesn't care about you or your position. It doesn't care if you are in the markets or on the sidelines. If you have 15 winners in a row, it doesn't care. If you have 15 losers in a row, it doesn't care. You can't make the argument that just because you have lost on a trade, you are now closer to winning. By doing so, you are doing exactly what we need to learn not to do. Every moment is unique. Just because you had 15 heads in a row doesn't mean the odds of a head are less on the 16th throw. They are still 50-50. Why? Because there is a complete randomness in the outcome of 1. That is another way of saying that every moment is unique. However, over time, the law of averages will come into play, and over 100 throws, you will experience 50 heads and 50 tails. However, while you may understand this academically and even logically, there is a good chance you will not understand this emotionally, especially if you just had 15 winners or 15 losers in a row. Therein lies the difference between the trained mind and the untrained mind. I will steadily guide you towards the trained mind so that you do not succumb to fear. Alrighty. So we're going to go ahead and wrap it up there. This book is incredible to me because that's literally the very first thing that I learned in trading. It's the principle about risk to reward. We're on page 213. Let me write that down. The principle of risk to reward is extremely significant because I completely agree. Trading, at the end of the day, you win and you lose, and that's it. The only thing that you can control is how much you win and how much you lose, right? Other than that, wins and losses, you can't control if you're going to win on this trade, and you can't control if you're going to lose on this trade. The only thing that you can control is the risk management. So the book is Best Loser Wins by Tom Hugard. Best Loser Wins. It's a great book. And even for my trades, so the September 2nd trade, for example, the September 2nd trade, if I walked away with 1R on this trade, I would have been extremely, not necessarily upset, but I would have not been aligning with the chart and flowing with it as well as I could have. And then when you stack the basic risk to reward principle that your winners, especially from a swing trading perspective, should be decently sized compared to your losses, I firmly believe that the macro time frame is bread and butter, right? Even if you're a day trader, you should still have these macro levels on the chart. The context of the market is king. We know that on a day like today, we're very unlikely to have a 1% move. We're very unlikely to have a 2% move. These things are just probability and statistics. It's not a guarantee, but probability and statistics is what makes a trader, literally. So when you're aligning with those probability and statistics and you're a day trader, you know that 66.95 through 67.03.75, that's your zone where the probability and the statistics are located simply based on the market's context for today. And we talked about that in thorough detail in today's session. So if you want to watch the recording will be up on YouTube. Thank you so much for listening, guys. I will see you next time. I have a lot more planned. There's a lot more refining to do with everything that I'm doing. When it comes to the trading, though, I do feel like the trading is fairly complete. It's fairly simplistic by nature. We can do the same thing every day, right? And we simply just follow along with the probability of the charts. But I do want to create more content for you guys. I do want to create better education, more complex as it pertains to the learning curve, right? I want the learning curve to be great. I want everybody to be on the same page, and I want people to understand their goals. I don't want you guys to just copy and paste what we're doing. Understand your goals, understand what you want to do. If you have a large account, understand what you want to do. If you have a small account, understand what you want to do. And there is room for everybody in the markets. Don't feel like you don't have a place in this game. Every single person has a place in this game. It doesn't matter where you are in the world. It doesn't matter how old you are. It doesn't matter where you come from. Everybody has a place in the game, in the markets. So thank you so much for listening. I'll see you next time, and enjoy the rest of your day. If you need a one-on-one with me, if you need anything from me, please head over to tradingwars.com and the Discord, where we do all of the real-time commentary. So for example, at 1:40 p.m. today, I talked about 67.0375. That's how price action looked at the time. If you need the Discord, head over to tradingwars.com. I'll see you next time.